Hi, everyone. So I am going live across a couple of different channels right now. I'm doing YouTube, Facebook, and Twitter. And the reason why I did that is to talk about the current market, the state of the market of the greater Atlanta area. So this is going to be an update for October 2022. And there's some interesting things that have been happening, like not so much in October, but like as of yesterday, there's been some crazy stuff going on. So, if you're joining me live, thank you. If you're watching the replay, thank you. But I just want to talk about, what's going on, and I'm going to make this a monthly thing just because it's been on my plan to do monthly, and I just decided today was a good day to start that. So, as far as the Atlanta, Georgia housing market goes, our median for October, our median home sales price was $410,000. So I'm going to share some my screen with you so you guys can see this information. So this is taken from FMLS, which is the first multiple listing service, and it's the service that we use here in Atlanta, the MLS service. And I want you to take a look at this chart. So this is where we are right now, $410,000. That is the median sales price of homes in the greater Atlanta area. If you look at that the month before in September, it was 420. August 426 and some change, all the way up. It peaked in June at 459,203. Now I'm just looking at single family detached homes, and that makes a difference. But when you're looking at, the state of the market, most of the homes in our market is going to be single family detached homes. So this is a good picture. And then as you can see, I just, I have all price ranges. This is just overall market view. So yeah. Now the market has not been, let's see, the median home price is the highest, is not the highest it's been. It hasn't been this low since March of 2022. So March of 2022, our median home price, sales price was 410. So we are kind of going backwards, which is, good for buyers because that means, the prices of homes are coming down. Now let's look at month supply. So right now our month supply is at 2.4 months. That means if we don't add any more inventory to the market and it keeps on going as it's going now, that we will run out of inventory in 2.4 months. So we use this to measure what type of market we have, whether it's sellers or buyers market. Anything under 5 months of inventory is considered a seller's market. So as you can tell, we are, an extreme seller's market according to this. And you can also see that it hasn't been this high since July of 2022. Like, I mean, sorry, May of 2022, May. And even then it was like 2.5. But and then June it dropped down to 2.2. So between May and June of 2020. And that's crazy because we've been down here. And most of you all know, like when we talk about low inventory, we've been 1 month and under. We got to the lowest point in January of 2021 at less than a month. So that is a good indicator of more inventory on the market. So additionally, good news for buyers. Now let's go to days on the market, and we're looking at median days on the market. And that number for October was 15. So on average, and median on a median day on the market, it's 15 days for homes that are on the market, median. Average looks a little, I think average might look a little different. Average is 28. So most people are used to looking at averages as 28 days on the market. So that is that will change drastically compared to the price point. So if we look at, we're just going to look at average, we're going to keep it on average. We look at under 200,000, that number is 25. From let's see, 200 to 349,999 is 29 days. If you go up the next bracket, it's 28 days. And if we look at 600 or more, it's 30 days. So that changes depending on the price point. So when I'm, talking to customers and I'm telling them whether it's sellers or buyers and we're doing our market research, I make sure to just drill this down to the price point because that is going to change. I also drill it down to the specific zip code that we're looking in because that will affect that too. So if I look in, let's just say I look in, let's see if I can do Henry County. This is what we're looking like here in Henry County. So those graphs change depending on, where you are. And then also, the price range you're looking at. So 31. And if if you're interested in Henry County, our median sales price is $392,750 for October. So it's below the greater Atlanta area, which is also cool. So let's go back to me. So yeah, that's pretty much what our market has been doing. And I want to get into interest rates and then talk about what that looks like for buyers and sellers. So this is what I meant when the market got really interesting as of yesterday. So sharing my screen again. If you do not follow me on Instagram, I posted, I think it posted to Facebook too, but it posted, no, I didn't. I need to post it, but I posted a reel to TikTok and Instagram and YouTube about why interest rates dropped. So I pulled up the current rates on Rocket Mortgage, which loosely I use, but the 30-year fixed rate right now is 6.75%. And it was about 7 and some change yesterday. So I'll share this screen with you as well. So we're looking at Rocket Mortgage, and these are their rates, okay? Each lender, the rates are probably going to vary. So the 30-year fix is looking at a conventional loan is at 6.75. It's interesting though when you look at the VA 30-year fix and the FHA 30-year fix because those rates are typically lower. Those are at 5.99% interest. So we're under 6% if you're looking at that. And the VA, that's with 0 points. Now to get this interest rate on a FHA 30-year fix, you see you're going to have that have 2.125 points. The same thing with the conventional, and that dollar amount is that amount. So you have to pay that amount to get this interest rate. That's what essentially a point is. So yeah, this is really cool. I also wanted to, highlight this because some people consider rates heavily when talking about if they want to buy or sell. And so if that's one of the things that has you on the fence about buying right now or has you nervous about selling, it's kind of good news. Don't know how long that will last, at least till this weekend because the markets are closed. So, those will be the prices. If you need a more solid number and you want to take that next step to look, I have the best relationships with the best mortgage professionals in the business, in my opinion, and I can get you, connected with them to look at your own situation and see what your own interest rate would be if you were to purchase soon. So I also wanted to talk about, we're talking about like sellers and, how they think about interest rates to figure out if they want to put their home on the market. There's a lot of new programs coming and onto the market as far as mortgages are concerned. And one you might have heard of recently, it's called a 2-1 buy down. And I kind of want to explain that just a little bit, like a brief overview. Next Friday, I'm going to shoot some content with my preferred lender, and he's going to expound on all this. But I was just wanting to touch on it really quick. So a 2-1 buy down is when the seller, how sellers are giving concessions right now, so they can give money towards closing costs, or they can give money towards buying down the buyer's interest rate, which is really cool. And then the buyer can choose, how they want to do it. But one product that mortgage companies are offering is the buy down, specifically in this case, 2-1 buy down. So that looks like this. So let's just say you get a mortgage and you are doing the interest rate is, we'll just say 7% right now, because we don't know how long these rates are going to last. So if the rates are 7% and you do a 2-1 buy down for the first year, the seller contributes this money, right, at closing, and it'll go towards 2 years of reduced interest rates. So the first year, that interest rate will be 2 points lower, which will be 5%. The second year, it'll be 1 point lower from the original rate, which would be 6%. And then the third year it goes back up to the 7%, which you initially agreed to. Now, this would be a good idea if you can afford the home that you want with that 7% interest rate. You essentially be getting a discount the first 2 years of owning that home. And let's say you want to refinance it before that third year comes and your rate goes back up. As long as the interest rates are down, you can most likely refinance into a lower rate. So it's really taking advantage of the current market and just some of the interesting things that are coming to play. But like I said, I have my lender on next week and he will go more into it because I'm not a lender, and he'll probably be able to explain it to you a lot better. So let's talk about what this means for sellers. Like this all the data that I just given you. If you were thinking about selling your market, here's some things that you should consider. Number one, there's more inventory on the market. So that means you might not be getting multiple offers. That also means buyers might be a little bit more picky when touring your home. So number one thing that I, tell my sellers is to make sure you have your house professionally clean. Sometimes that can make a difference between whether a buyer wants to move forward with offering your home, or if they're just like, oh no, this house is dirty, I'm going to just take this off the list. I've had it happen before. Even though you can tell them you're going to get it clean before closing, it's all about first impressions. So having your home cleaned, like immaculate, like a showroom, that's why I say professionally done, will allow you to be able to offer your home at dollar and hopefully sell it for top dollar too. Because a lot of times homes are going on the market right now and they get those price reductions within a week or two if there's no activity on it. So a good way to avoid that is make sure you have all your updates ahead of time, have everything fixed that you're going to get fixed before you put on the market, and have it professionally cleaned so that it shows as new as possible. Now, if you're looking to sell quick and you want an offer from an investor, that's obviously not going to be as important. But if you're listing on the MLS and you're expecting top dollar for your home, you need to make sure you have those basics in place. Second thing, you might want to consider offering more incentives, whether that's going to be money towards closing or, like I just mentioned, the 2-1 or 3-1 buy now, whichever is being offered. And then lastly, it's so imperative that the home is priced right. When I'm pricing homes right now, I can tell you, because the volatility of the past few months on the market, it's harder to get a good gauge on how to price homes because we can't look at home prices in the neighborhood 6 months ago because rates were lower. Houses were moving more quicker. There was less inventory on the market, and that all plays a factor into how quickly the homes will sell. So there's been some homes priced what I think is right, and they've been sitting on the market for 40 days because frankly, either buyers have pulled out or they have more options. So, if the home isn't showing well, then they're not going to go for that. So, it's very important that, sellers are considering those three things in this current market. Next month, it might be something completely different, but as of right now, make sure your home is spotless and clean and updated and fixed and in great condition. Make sure you're offering good incentives to entice buyers to come see your house and want to put it on an offer, and make sure you price it right also to attract the right buyer for your home. Now, for buyers, it's going to be a little bit more different. So it's good news for buyers. Now, no more settling. Yay! You don't have to I don't know, how do I put it? So, when, usually when I'm working with buyers and I set up a home search previously before and like 6 months ago, we would have to wait till a nice home came on the market that they'd actually want to see. And sometimes we would, end up wasting time looking at homes that really didn't meet their needs, but they felt like they needed to be looking at something. And thankfully, none of my buyers, at least to my knowledge, settled with the home they purchased. But there has been articles about people regretting buying homes because they were desperate to get in a home and the home that they chose didn't meet their needs, but it was the one that they want to offer on. So thankfully, it's changed, so you have more opportunity to get the home that you want to get. And another thing we want to look at with buyers, what might be differently, there are more down payment assistant programs. So those essentially kind of like disappeared during like after COVID in 2021. It was very hard to come by down payment assistant programs. And if you did come by them, a lot of them take 45 days to close or more. You can't be competitive in an offer in a multi-offer situation if you have to wait 45 days or longer to close. Now, like I said, because we are being more competitive, we are seeing less competition. You're able to, explore your options with down payment assistance programs. And if you need help learning about them, let me know. I will get you in contact with my preferred lender, who has access to those programs. Now, here on the flip side, let's talk about like the approvals. So, what buyers may run into if you are doing like non-traditional, not what we call non-conforming loans. Um, so not FHA, not VA, not those typical loans. But if you're doing like a bank statement loan, it might be harder to qualify for those type of loans because lenders are getting more strict because those terms are a little more loose than FHA, conventional, and they don't get traded on the market, on the open market. Usually, if a lender offers that loan, they keep that loan. Or if you bought a house before, like if you get a conventional FHA, you typically don't stay paying that loan company a lot of time for long. A lot of times they'll sell your loan to another company and you just, same terms and everything, you just start paying someone else. That means they bought your loan. So these loans aren't changing hands like that. So it's more of a risk if you default to that original loan company. So they are having more tighter restrictions and such as like they might raise the credit score. It might be 640 when you first, consider the program. Now it might be 670 minimum credit score. So those are pretty much the things for buyers to be on the lookout for in this market. I hope all this was helpful. I wanted to tell you guys about something that I'm doing for all of my whether you're a past client, friend, family, you don't know me, if you refer somebody to me, and I will get more like material and marketing stuff out on this and post about it more. But you are the first to know. My new incentive that I have coming up is if you refer someone to me as a buyer or a seller, and once they close their home, you will get a $100 gift card to I want to do like a home store because my brand is like Marty Loves Homes. So, like Home Goods or Kirkland's or whatever. But honestly, $100 gift card to whatever you want. And yeah, that is going to be my incentive for referrals. So I appreciate referrals, whether it's from another agent or whether it's from past clients or the people that know me. Like, thank you so much. I've gotten a lot these past months, and they are under contract, and they're going to be closing soon. And like my best friend, for instance, she was referring me to people, and she was like, "I need a gift or something." I was like, "You're right," and that would be a good idea, to incentivize people to work with me. So, and then to show you how much I appreciate you for the referral. So, if you refer, and it doesn't have like an expiration date. So, if you refer a client to me, whether they're a buyer or a seller, once they close, you will get a $100 gift card. So, as my way of saying thank you. So, I Oh, you know what? I wanted to do one more thing, just to show you like where prices are right now. So I'm going to share my screen again. I have a mortgage calculator and I wanted to look at, monthly payments. Now this is just principal and interest. So I already plugged in the amounts and I just used the average home price, right? The median home price in Atlanta for October, which is 410. So that's the loan amount right here. And y'all, I Googled this so you can play around with it. So, earlier this week, interest rates had hit like 7% higher if you have a lower credit score, but for a 30-year fix is roughly around 7.3. That monthly payment before taxes and insurance was 2811. So now let's look at with these interest rates that we got quoted today at that 599. Let's just say you did FHA, 2456. So that's a $400 savings. So wow, that's how much an interest rate can impact your purchase power. And let's to tell you what we were looking at earlier this year, we were probably at 2.99. That same house would have been had a monthly payment of 1726. So essentially, when interest rates double, so do your monthly payment. Well, it didn't double. Your monthly payments don't double, but it did go up $1,000 from this to that. And I think what was the other one? 6.75. Let's just say you have average or good decent credit and you get 6.75. Your monthly payment for $410,000 home is $2,659. So now you guys know that, or maybe you don't. FHA loans, you have to put 3.5% down. So if you do that loan program, you put 3.5% down. Your monthly payment is $2,456. 410, and at least around here in Henry County, you can get a nice 4-bedroom. Some areas you might be able to get new construction. I know of a couple of new construction places that you can get very nice brand new home under $400,000. So yeah, that would be your mortgage payment. That what was it? 2456 estimated. Okay, before taxes and insurance, you do have to factor that in, and that's going to depend on who your insurance company is and which county you live in. So yeah, that's what that looks like. So if you just imagine, like, if you are one of those people that are paying like outrageous rent and your rent is higher than that amount, it's gonna be advantageous for you to buy. But everything's all relative to each individual's personal situation. So I try very hard not to make blanket statements, which is why I always tell people, if you have questions, call me. If you want to know, more solid information about mortgage rates and stuff like that, let me know. I can get you in touch with my lender because everyone's situation is different. So thank you guys so much for, joining me today on this stream. I hope you got some value out of it. If you have any questions, feel free to email me or send me a direct message. And I will see you guys next time. Bye.